It's time for the Southern California housing market update, where you get the latest data and exactly what's happening for single family and multifamily sales in Southern California. We're going to cover mortgage interest rates. We're going to look at mortgage applications, and then we're going to run through those single family and multifamily numbers. Now, we've noticed an interesting trend in single family, especially since we have an entire month of data. Hey there. Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers make the best decisions in this crazy market, and it's time for another one of our every 2-week market updates. In this one, we're going to cover our custom numbers that we pull directly from the multiple listing service, and make sure you tune in later in the week because we're going to go through median home price numbers and show those Altos reports. So if you're ready to dive into the single family and multifamily numbers for LA, Orange County, San Diego, San Bernardino, Ventura, and Riverside counties, hit that like button and let's get started. A discussion about the Southern California real estate market would not be complete without a discussion about current interest rates. As we've mentioned before, they have gone through the roof since the first of the year, and about 2% they have increased, which is one of the quickest increases we've ever had in such a short time. Started in March and through April, May, and June got crazy. And we got into June and they shot up because of fears of inflation and fears of a recession in the economy. So the Fed funds rate was increased, but since then we see that interest rates peaked and then have since dropped. So they're definitely not nowhere near record low levels, but they are moving backwards. This could lead to more pending sales as buyers say, look, I'm going to lock this in before it increases again. This may not show up very dramatically in the numbers that we're about to show you because we're covering all of June and it was up and it was down. But we will see when we run a report for halfway through July just what this recent effect is on the recent drop. And we thought we'd throw in a good leading indicator, and what this is mortgage application. So people applying for mortgages to buy a home. And this is a leading indicator because that's the first step before they can get the property under contract, get into escrow, and close on it. So this is an important first step unless they're buying with cash. But what we can see here on this first chart, this composite index compares the 30-year interest rate to an index on the number of people who are applying for loans. And you can see that it is down as interest rates shot up here this year. The number of applications went down. But I always talk about perspective. I'm going to give you perspective in two separate ways. So number one is, where are most of the numbers leading to this downturn? It's actually in refinances. That composite index has both purchase and refinance in it. And you can see refinances have died for obvious reasons because rates went through the roof. You don't refi. Looking here in the purchase index, we can see that there was a dip, but nowhere near as strong of a dip. It was all in the refinance numbers. That's where mostly the dip was. In fact, it ticked up. The applications ticked up as rates have dropped a little bit. So this is a good leading indicator on where things are headed. And let's give it some more perspective. So when we look at the trend over 10 years, for interest rate, obviously it's up and down, but let's look at applications, and this is purchase applications, people going out to buy a home, and we can see that we're nowhere near crazy low levels. We're pretty much at 2018-ish levels for the number of applications. And let's go ahead and add some more perspective. So here's some more perspective. When we look at the trend going all the way back, as far as the data goes, we can see that where we are right now compares to 2018, 17, not as low as post-global financial crisis, which we can see here, the numbers of applications dropped. And also, interestingly, we're not at these peak levels that we see, the number of applications we had that were leading up to the housing bubble when people who shouldn't be getting loans were getting loans. We don't have that same level of the number of applications. So I think it's helpful to take a look at this and put it in perspective. So let's dive into the data that we pull straight from the multiple listing service. This is for all of June. And I will tell you, when we ran our report halfway through June, things were not looking good in the Southern California market, in the sense that our pending sales were way down. It doesn't look as bad in several of the Southern California counties now that we have data for the entire month of June. Still, there is a change in the market and sales are dropping. When we look at mortgage interest rates, of course, it explains why we saw pending sales drop, but we may actually get a little bit of an uptick in the number of pending sales if rates continue on their current trend. But let's look into the numbers and see here. So you can see, and I've talked about it before, a bird where it's a nice swoop, and Orange County isn't too far off of a bird. What I will say, obviously the pending sales are down as compared to 2018 and 2019. But again, like I've said in other videos, the number of listings are down. So sellers aren't rallying to the market like we've seen in other cases when interest rates went up. Sellers dumped their properties on the market. Hurry up, get it on the market. That's what happened in 2018 in November. But we're not seeing that in the data for 2022 with rates going up. So there is definitely inventory ticking up, and our second market update of this week will talk about the amount of inventory that's out there, but it isn't a dangerous level that you should be worried about yet. We're going to track the data to see if it gets there, but right now it's not looking like that. So we have a small gap between the new listings and pending sales in Orange County, not as small as 2021, but a bigger gap in 2018 and 2019 between those numbers. So this market right now, even with all the craziness of the interest rates and worries about recession and things like that, is still showing a relatively solid market. And this is more of a seller's market than we had in 2018 and 2019 in Orange County. Very interesting to see how things have changed when we look at the full month data. LA, we're seeing a big drop in those pending sales. You can see the numbers are down for the number of properties that went under contract. Now, at the same time, listings are down as compared to 2018, 2019, but we have a bigger gap in 2022 between the new listings and pending sales versus 2018 and 2019. And definitely 2021. So this is a different market. If you're out there buying right now, writing offers in Los Angeles for single family homes, this is an easier market than we've had in many years. So this is a market where there is more choice, and it's definitely feeling like an easier market, nowhere near what it was like for 2021 for buyers out there. And Riverside, this one, we do see a bigger drop in pending sales, and we're definitely below 2018 and 2019 numbers. We're seeing a shift. If you compare the gap between the new listings and pending sales, this is the biggest gap we've seen, bigger than 2018 and 2019. In 2020, we had a twist where there are actually more properties going under contract than new listings. Those days have sailed. We have, in 2 years, we have a dramatic turn in the market. Now, we'll have to keep watching these numbers. If we see the inventory continuing to tick up and the demand continuing to go down in Riverside, that could lead to a change in pricing. We're not quite there yet, but we're going to have to continue to track it. Now, one explanation for this is also the increase in the price of gasoline. So folks used to drive until they could qualify for a home. From the coast, you drive in. It's much more expensive to do that with the cost of gasoline. So that could be one of the reasons that we're seeing fewer sales out in Riverside County right now. In San Bernardino, it is actually pretty close to a bird. It's off by a little bit in 2022, but it's not an extreme drop in the number of pending sales. It is lower than any of the previous years, but not off by a lot. The listings are down, and it pretty much looks like 2018 or 2019 for buyers and sellers out in San Bernardino right now. Of course, we'll keep tracking to see if things change as we get further into the summer. And Ventura, it always marching to its own drum, has a drop in pending sales. We've seen this before where they have a big drop in pending sales. It's hard to tell if this is a trend that will continue, so we'll keep watching this. With the listings where they are and the number of pending sales where they are, we're going to see an increase in the amount of inventory in Ventura, and we'll talk about that when we run the Altos Research reports later in the week. And San Diego and Orange County have been tracking very closely, but there does seem to be a shift. San Diego was one of the holdouts, a strong market, but it does appear there's a drop in pending sales. So at a record low for pending sales, it's affecting the number of sales. Those are down, and listings are down a little bit. They're the lowest of the years we're tracking, but not crazy low. So it does feel the gap between pending sales and new listings is similar to 2018 or 2019 in San Diego. It has definitely shifted from that extreme seller's market that we've had in San Diego. If you've been watching these, you've seen that since the first couple months of the year, it was an amazing seller's market. Now it's backing off from that, returning to a normal market. Diving into the multifamily data, one of the only places where you're going to get this. And let's see what the current state of affairs. We haven't seen in multifamily a big shift in the market. We saw single family where it slowed down a bit. Multifamily appears to be moving along pretty strongly. In fact, for pending sales, this is a pretty high number. It's number 4 of the 5 years we've got here. And inventory is pretty solid. There was a dip in 2019, but other than that, the inventory levels are solid. So right now for multifamily, if you're well priced and you don't need too much work and you've got relatively solid rents, you are going to trade at a very good price. So this is still, I would say, a seller's market for multifamily in Orange County. LA still under eviction moratorium for LA City, and after AB 2179 expired, which it just did on July 1st, the LA County is back under eviction moratorium, and we really haven't seen it reflected much in the data, to be honest. So if tenants aren't paying rent due to COVID-19, they can't be evicted, but it hasn't slowed the market. Pending sales are down a little bit for multifamily in Los Angeles, but it's not a big, huge, dangerous dip. 2020 was lower for obvious reasons, but still a pretty solid market considering they're still under eviction moratorium. And you can see that the level of listings is pretty consistent as well. And we've noticed this trend in Riverside County where the multifamily sales are down. We see pending sales are down. Thankfully, inventory hasn't gone through the roof for them, so we have a pretty similar gap. In fact, a bigger gap in 2018 between pending sales and new listings. But there is a drop in the number of properties going under contract in Riverside. San Bernardino, we do see a drop in pending sales as well. And the gap between the new listings and pending sales is pretty consistent, to be honest, with 2018, 2019. So not an extreme market either way, kind of a normal market. We'll have to keep watching to see what is leading to and where these numbers go for counties like Riverside and San Bernardino for pending sales for multifamily. And Ventura kind of always all over the place, but not a bad market right now. 2020 and 2022, almost identical markets. So interesting to see that it still actually looks a little more solid than the single family market does in Ventura. And San Diego has a dip in the number of properties under contract. It is low compared to the years we're tracking. And inventory is very consistent, but there is a big gap between listings and number of properties going under contract that's consistent. So this is a market that's pretty balanced actually. And as long as inventory doesn't spike, it'll stay moving along pretty consistently here. Let us know in the comments below where you think the Southern California market is headed. Are single family sales about to take a bigger turn than we've seen here? I want to know what you have to say about it. In order to get all the charts from this video and all the charts in upcoming videos, make sure you subscribe to our free weekly email newsletter and check out this next video where we cover more that buyers and sellers need to know about the Southern California housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.